Many people have heard about Forex trading, stock trading, and other similar activities, but not many people have realistic views about these activities. What is possible, what isn't, what is realistic, and so on. There are many urban legends about traders who are profiting by several 100% per month, or people who got rich almost overnight without much effort or risk involved. While some of those stories are true, the main truth is that despite some rare exceptions, there is usually no easy way of making money, and there is definitely no easily accessible free money. For every successful human activity, a certain amount of effort, time, and discipline is involved. Forex trading is no exception. Forex trading is not hard to learn, but one needs to apply a certain degree of effort in order to become profitable. So, what are realistic goals in Forex trading? Around a 10 to 30% gain per year. This also depends on your sum on deposit. If you deposit a smaller sum, you are willing to risk a bigger percentage per trade because losing that sum will not cause you pain. Some traders even earn 10% some months, but take this as an exception rather than a rule of thumb. Trying to earn more than 30% on a bigger deposit will involve some risky tactics, which may go against you, leaving you in minus position. The best approach is use proven tactics and risk management. Be disciplined and patient and let the market decide. Don't set profit goal in advance. And what are realistic time frames for trading? They depend on the free time you are willing to allocate to trading, but there are some general truths irrespective of trading time frames. One of these truths is that scalping and very short-term trading are the hardest ways of earning continuous profits in Forex. Mid to long-term trading time frames give you much more chance of being profitable. In very short-term trading, time frames lasting a few minutes to several hours, mini and micro trends are easily formed and easily reversed. This is because they are not stable and have no powerful forces behind them. Furthermore, the micro trends change direction often and effortlessly, which means there will be false trading signals resulting in trades that end up with a loss. As a consequence, risk-reward for this time frame is not very satisfactory. In contrast, mid to long-term trends need more time and forces behind them to form. As such, they are more stable in duration and appearance. There is less chance that a bigger trend, once established, will suddenly change its direction. If some currency starts to go up over a period of days or even weeks, there is a prolonged reason behind that move. It doesn't go up, then immediately down, then up again, like a zigzag. This doesn't make sense. Longer-term time frames have more probability to end up as a profitable trade. The drawback is that these trends don't form as often as short-term and micro trends, meaning that more patience is needed for those trends to form. There are also fewer trends of this kind formed per year, which translates into fewer profit opportunities. Overall, however, long-term trading is more profitable and should be considered as an easier tactic than conducting very short-term trading. That's why we mentioned 10 to 30% per year as a realistic profit goal. However, we will cover every one of these different time frames and explain how to extract maximum from each of them.